Over the past few days, we have seen a lot of big companies release their latest quarter's earnings report, and in this video, we're going to be touching on 3 of those companies. And the 3 companies that I want to touch on in this video are going to be Exxon Mobil, we're going to be looking at Microsoft, and then we're going to be looking at the earnings for the big dividend payer Altria, stock ticker MO. So let's go ahead and dive into it. Now, the first company that I want to touch on is Exxon Mobil. This company is currently trading at around $119.64 per share and is on the upper end of their 52-week range. If we look at them over the past year, they've done decent, up around 4.33%, but that is a little bit lower than that of the market. Now, let's go ahead and jump into the earnings report. If we scroll down, we can see they saw a miss on their earnings per share by about 12 cents. They reported Q1 non-GAAP EPS of $2.06, but they saw a slight beat on revenue. They had around 83.08 billion, which was a beat by around 1.57 billion. They had a beat by around 1.57 billion, but we do have to keep in mind this is actually down around 4% year over year. Now, if we look at how the stock has traded over the past 5 days, we can see there was a pretty decent decline at the time they released their earnings, but again, over the past 5 days, they've traded pretty flat. We also need to keep in mind that Q1 adjusted earnings were 28% lower than in the same period last year as oil refining margins and natural gas prices fell from post-COVID peaks. And that's something we'll touch on here in just a second. But let's go ahead and jump over to the stock screener spreadsheet. We'll come up here, plug in XOM and hit enter. And you can see all this data is going to automatically load in thanks to the help of the ticker data add-on in Google Sheets. And like always, if you'd like to be able to download that add-on and get access to any of these spreadsheets, then you can head over to tickerdata.com. Now, immediately when we look at Exxon Mobil, there's a couple of things we can point out. First, quickly touch on the dividend metrics. They have a starting dividend yield currently sitting at about 3.18% with a payout ratio of around 41.49%. Now, simply starting at revenue per share, what can we tell? Well, revenue per share kind of jumps around all over the place. And as we'll see with these other metrics, that's kind of the theme for Exxon Mobil and really for a lot of oil companies. If we look at earnings per share, we can see post 2020, it's actually been pretty solid, quite a bit higher than it has been when you compare it to the last decade. And the same is definitely true with free cash flow per share. In 2020, they actually had negative free cash flow per share, but in 2022, it got as high as around $13.89. So the past 3 years for the company have actually gone pretty well. But like we just read, it looks like oil refining margins and natural gas prices fell from post-COVID peaks. So if we jump back over to our screener tab, jump over to profitability and income statement. Look at the gross profit ratios for this company. They have a 10-year average gross profit ratio of around 32.32% and a 5-year average gross profit ratio of about 30.64%. But look at the dive they saw in 2023. In 2023, gross profit ratio of around 24.67%, which is considerably lower than it has been over the past decade for the company. So maybe a little bit of a red flag there. So something you have to understand about companies like Exxon Mobil that are in the oil and gas industry is they are often very cyclical. It's very hard to predict earnings and free cash flow growth over time. Now, that doesn't necessarily make them bad businesses, and for example, Warren Buffett owns Chevron. But as for me personally, I much rather invest into companies with very stable and predictable growth in their top and bottom lines. And when I look at a company like Exxon, I just find it very unpredictable when trying to project their future free cash flow growth. Now, looking at the dividend metrics for Exxon, we can see the free cash flow growth obviously looks pretty good because the past 3 years have been so good for the company, but the dividend growth hasn't really followed. We can see they've gone from around $2.46 per share to $3.80 since 2013. They have a 10-year dividend CAGR of about 3.48%. Now, the problem is obviously increasing dividend payouts every single year when your free cash flow growth isn't predictable or isn't steady. It's a pretty difficult thing to do if you're not careful. Now, the next company we're going to be looking at is the big dividend payer Altria Group, stock ticker MO, trading at $43.82. And we can see actually over the past 5 days, they've done pretty well, up around 3.23%, but over the past year, down around 8.29%. But to be fair, they do provide most of their returns in the form of dividends. Now let's go ahead and jump into their recent earnings report. If we come down here, we can see they reported Q1 non-GAAP earnings per share of $1.15, which was in line with analysts' expectations. Revenue came in at $4.72 billion, which is down slightly year over year, and was also a miss by about $10 million. Now, where did this miss come from? If we dig into this a little bit deeper, we can see reported revenue fell 2.5% year over year to $5.58 billion, and this drop was primarily driven by lower net revenues in the smokable products segment. But this was partially offset by higher revenue in the oral tobacco products segment. So the slight decrease in smokable products segment, obviously not something we want to see, but it was slightly offset. And the other good news is if we come down a little bit further, we can see Altria also reaffirmed its 2024 full-year adjusted diluted EPS guidance range of $5.05 to $5.17, representing a growth rate of around 2% to 4.5%. So overall, they are still reaffirming their 2024 full-year guidance. guidance. Let's go ahead and dig into this company a little bit more. Come up here, plug in MO and hit enter. And one of the things you'll notice is revenue for this company is growing, but it's not growing at a high rate. And it's important to note, we're really looking at revenue per share, so that does account for share buybacks. The company has bought back a decent amount of shares over the past decade, going from around 2 billion to currently sitting at about 1.77 billion. And they do also have a share buyback plan in place as of right now, which will help boost revenue per share over time. And obviously that will also help earnings per share and free cash flow per share over time. Now, something that surprises a lot of investors about this company is they have very high levels of return on invested capital. Look at this in 2021. Return on invested capital of about 28.3%, 2022, 29, and in 2023, 39.27%. That's really nice metrics. And if we jump over to the profitability sheet, again, one of the things you'll notice, 10-year average gross profit ratio of about 62.72, but in 2023, they reported gross profit ratio of right at 70%. That's a really good sign for the company, and it's a really good sign for more mature companies that aren't really growing revenue at a high rate. This is a good way for them to become more profitable. So when we look at the gross profit ratio chart over time, we can see increases, again, a very good sign for the company. When we look at the dividend metrics for this company, obviously high starting dividend yield sitting at about 9% and high payout ratios, but it is important to note the high payout ratio is a part of the management team's plan. They are committed to paying out around 80% of the company's earnings in the form of dividends. At least that's what the management team has told us. And they've also done a good job of increasing those dividend payouts over time, and those dividend payments are covered by their free cash flow. And then lastly, we have one of the larger positions in my personal portfolio, and that is Microsoft, stock ticker MSFT, trading at $402.25 per share. And over the past year, they've done very well, up around 31.64%. Now, in the past 5 days, they're actually down around 2%, and they were trading pretty volatile as of their earnings report. But again, as of right now, trading at $402.25. If we look at the earnings report for this company, we can actually see shares jumped up around 5% immediately after reporting because they saw Q3 GAAP earnings per share of $2.94, which was a beat by around 11 cents, and revenue of $61.9 billion, which was up 17.1% year over year. So that was a beat by around $1.01 billion. So pretty nice beat on the top and bottom line for Microsoft. Now, a couple of quick notes about Microsoft and their recent earnings. We can see a huge driver of their growth came from the cloud, and it also came from personal computing, and we can see the growth rates for those metrics here, but we can also see the company is increasing their market share as a cloud provider. Look at this since Q4 of 2018. They've increased at a much higher rate than their competitors and are increasing their market share. That's a good sign for the company. If we jump over to our stock screener tab, let's come up here and plug in MSFT and hit enter. And if you're anything like me, I think you're gonna really like what you see. Now, obviously, low starting dividend yield sitting at about 0.75%, but look at the growth this company is seeing on top and bottom lines. 2013 revenue per share of $9.30 jumped all the way up to $28.46 as of 2023. Pretty rapid growth. The same is true with earnings per share, and the same is true with free cash flow per share. So the company only has a payout ratio of around 27%, so they're using a lot of capital to do things like reinvest back into the business, buy back shares, and attempt mergers and acquisitions. We can also see things like their debt to assets ratio has greatly improved since 2017, and the company also has high levels of return on invested capital. If we look at the profitability spreadsheet, we can see the gross profit ratio has stayed steady while revenue has been rapidly increasing. That's a very good sign. And if we jump over to the dividend breakdown sheet, we'll plug in MSFT and hit enter. And again, low starting dividend yield, but low payout ratios, high dividend growth, and high free cash flow growth. This looks like everything that I want to see from the companies that I personally invest in. So there you go, there's a quick overview of 3 companies that just recently released their latest quarter's earnings. Go ahead in the comments down below and let me know if there's any companies you want to see. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.